How's it, guys? Welcome to Paradigm Flip, and today I just wanted to touch on something very interesting that I hope can help you progress in your trading and spark some thinking. What we have in front of us is Euro USD on a 5-minute chart, and overlaid in yellow or orange is the gold. And these two are obviously positively correlated, and that is due to fundamental reasons. And the reason being is that the gold is a commodity and is priced in dollars. So when the gold rises, the dollar depreciates in value, and it has that inflationary effect. And this is what really causes the relationship between the two. And because of this, there are often times where these two pairs are tightly correlated. Now, it's not all the time that they are positively correlated. There are times where this correlation breaks down on a macro and even a micro scale. So some of those areas, if you just take a look here, we can see a breakdown in correlation. You can see a little breakdown in correlation there and a little breakdown in correlation there. And this is very important and interesting at the same time because we can actually take advantage of this in our trading. Now, because these two are positively correlated, it doesn't mean they are moving lockstep with each other. And this is actually good because this is where we can come in and take advantage of that. You'll find there are instances where either the euro US dollar or the gold is more volatile than the other, and one actually leads the other in whatever direction they are going. So whether they are going up, right? You can find maybe the dollar leading the gold, the euro US dollar leading the gold, or you can find the gold leading the euro USD. And there are also other instances whereby they actually revert back to the mean. So a good example of that would be in this area here. We can see that the gold basically drops and the euro US dollar rises, and what essentially happens is there is a reversion back to the mean. And this is caused by spread traders that are taking advantage of the positive relationship between the two. And what's actually happening is that you have buyers of gold coming in and they are hedging their risk by selling the euro US dollar in equal dollar amounts to the gold. And what essentially that does is creates a direction neutral trade, right? So whether the market goes up or goes down, these guys are able to make money as long as the spread between the two closes. Okay, so another example is this area here, right? You can see the spread between the two widening and they narrow, right? Same thing here, right? The spread between the two is widened and they're narrowed. And notice that the gold goes up and the euro US dollar goes up as well. However, if you sold gold in equal dollar amounts to euro US dollar and you had a market neutral trade, any gains made on the euro US dollar from this point onwards, right, offset any losses made by the gold, right? So gold goes up, you sold gold, and you are in a loss on gold, but your euro US dollar trade is actually making money. So you make money on the reversion. And this is actually called pairs trading, but we're not yet to touch on that. However, it is going to help us. An understanding of it is going to help us in what I'm going to talk about today. And essentially, that's basically what we see in front of us. Now, how can we actually take advantage of this? Now, the first thing we want to do is we want to always trade with the trend of the two. So it's very obvious that this trend is going up, but we want to look for pockets or areas whereby the spread widens. But we are not going to take a market neutral trade or a spread trade rather. We are going to take a trade on one of the pairs. And let me just go into this example, right? So a good opportunity, for example, would be to buy gold during this area here, right? We can see gold impulsed up. At the same time, the euro US dollar impulsed up, and gold drops while the dollar rises a bit and stays somewhat flat. At this point, there's an opportunity to buy some gold, right? And our hope is that spreaders come in, right, and buy gold, and whether they are selling the euro USD or not, our hope is that when this spread reverts back to the mean, that the gold ends up trading higher. Okay, so that's how we're going to take advantage of it. And in order to do this, we actually need a way to quantify and just take that off, we need a way to quantify the relationship between these two, and we can do that by simply putting a correlation coefficient on the chart. And if you look here, we have a correlation coefficient of gold, right? There the inputs are, and we put a length of 100 periods because that would give us about 8 hours, which is about a session. So we're looking at the correlation in the last session. And we only want to be looking for opportunities when we have a statistical edge, right? So when the correlation is high, you can see around this area here, the correlation is about 86. So that means 86% of the time, gold and Euro USD are moving in the same direction. Now, that gives us an edge because we know that if Euro USD rises and gold drops, and overall the trend of the two is up, right? We know that gold will essentially continue back up in the direction of the trend, right? In the direction of not only its own trend, but the trend of Euro USD, right? And we have an 86% correlation, so that means 86% of the time this is happening. Okay, so those are basically the odds we have of the continuation occurring, or the odds of the gold continuing higher along with the Euro USD, right? And another example, and the example is on Euro USD, and which is really the area I wanted to highlight, is around this area. And we can see that if I just remove gold off for a bit, we can see that this clearly has an uptrend. Now, we made a consolidation and we broke out of this consolidation. So at this stage, we can assume that bulls are definitely in control of the market. Now, when we retest this area, this is an area where we can expect buying to resume, right? And we also know that these pullbacks or these consolidation areas are reaccumulation points, okay? And we can actually time the end of those reaccumulation points, obviously at a support area, right? Which would be this previous balance area, or an area where there was previous buying. And if we overlaying the gold, we can see right now that the gold is moving higher, right? So if I just draw a line from that point to that point, Euro USD is moving lower, while at the same time, gold is actually moving higher, right? So what this essentially is telling us, it's giving us an insight that we may expect, not only do we expect buying to reoccur at this consolidation area, right? There's a higher probability added to it due to the fact that we also have spreaders, right? A possibility of spreaders coming in, meaning that we can expect buyers of Euro USD and we can expect them to hedge that risk by selling gold because we have a spread, and therefore we can expect buyers to come in below Euro USD. So we can essentially assume that this pullback or consolidation into the retest of this balance area is actually accumulation for buying, right? And we can make that assumption with good probabilities on our side. We also know that the correlation coefficient is telling us that within the last session, right, within the last 100 periods of a 5-minute chart, or the last 8 hours about, has an 86% correlation. So that means 86% of the time, gold and Euro US dollar are going to move in the same direction. So if Euro US dollar is pulling back while gold is rising, and overall both markets are in an uptrend, we can assume that Euro US dollar will catch up and continue the uptrend, right, and resume its uptrend. And obviously we want to be doing this at a logical point where it's most logical for us to enter or time the trade. And that essentially is all I wanted to show. And I encourage you guys to just go and take a look at this, right? Now, don't abuse it, test it out, and go back and really look at areas where the correlation is high, okay? So you really want above a 70% correlation, right, for these kind of setups. And I hope it finds you well. I really hope you enjoyed this video, and in the future we'll be talking about how we can enter these trades and what targets you can actually set, right, for a higher probability of success in these trades. So please do like, subscribe, and uh, make sure you get notified whenever we upload, and I hope you have a good day. Thank you.